Welcome everyone! Thanks for joining another chapter of the Financial Independentist. Today, we're gonna do a deep dive in a company that has recently fallen out of favor with the market. That is Duolingo, the language learning app, or rather, a global interactive education platform. In this video, we will take a look at Duolingo's business model, their financials, and whether the market is right in penalizing this company or if it's yet another inefficiency fueled by lack of understanding and short-term vision. Then, I will be going over the CEO long-term strategy, and finally, I will discuss my game plan with respect to this company, whether the stock is a good buy or not at today's prices. Duolingo is a small company trading at a market cap of $8.5 billion with over $1 billion in revenue, gross margin of 72%, and already profitable. The company is very well capitalized with over $1.1 billion in cash equivalents, and short-term investments, and virtually no debt. Duolingo stock has been flat over the last couple of years, but earlier this year it went up quite a bit, during May and June timeframe. However, the last couple of earnings releases, the market has been punishing the stock quite severely, losing all the gains and then some. In particular, the stock didn't do very well in the last earnings release, when it collapsed from around $300 per share to around $180 per share. That's a 40% drop. In this video, we will take a closer look at this earnings release and we will try to understand what happened and whether the market is right in dumping this stock, or we want to take a contrarian approach and see a great buying opportunity window. But before that, let me share a quick reminder that just a few days ago, we published a video analyzing one of the best companies you can own, American Express, doing a deep dive into their financials and business model. We put together a very detailed analysis that presents a compelling investment opportunity, which I'd recommend you check it out. Link in the description below. And by the way, if you like this content, please make sure to hit the like button and subscribe right now. It really helps the channel grow and you'll even get better content in the future. Please also leave some comments below regarding Duolingo, whether you own shares, and if you're bullish on the company. Alright, let's get started. In the latest earnings report, Duolingo posted all-time record numbers in all metrics. Revenue for the quarter was $271 million, up 41% year-on-year, from $192 million just 1 year ago. That's a very strong number up there. Total bookings were almost $282 million, up 33% from the $211 million reported last year. The total bookings metric represents secure revenue earned at closing of the quarter, for example, to account revenue payments from subscriptions. While reported net income was $292 million, there was a distortion on this number caused by a one-time tax deferral benefit, so we should instead look at the adjusted EBITDA, which was $80 million, up 68% year-on-year from $47.5 million. There were two main factors for this improvement. First, as we discussed before, the revenue had also increased, but second, there was a substantial operating margin improvement from about 25% to almost 30%. Those are very strong numbers as well, and it's a clear reflection that this company is a cash-generating machine. Duolingo's revenue has two main components, subscription-based recurrent payments and all other revenue. This last component aggregates the distinct verticals. First, advertising income, mainly from freemium users. Second, payments from the Duolingo English test, which is a paid English professional proficiency exam already accepted in thousands of universities, colleges, and other institutions worldwide. And third, in-app currency purchases like gems, which can be used to acquire different items and benefits on the app. Here we have a glimpse of what Duolingo's management keeps iterating on, building more and more evergreen verticals, making them grow, and making them profitable. We will discuss more on this later in this video. We see that about 85% of the revenue comes from paid subscribers, which are growing at a very good rate, and are the most recurrent form of revenue that Duolingo has. This is the highest quality form of revenue. If we trace back to 2020 and check the quarterly revenue, we will find a very smooth and ever-increasing revenue ramp that goes up and to the right. This is the ideal figure any investor would love seeing in their company, and here we have it. Revenue is growing strong at about a 40% yearly rate, which the company has been able to sustain or exceed for years. This is very impressive. The company also has a good history of free cash flow generation, and while there are some quarter-to-quarter swings, such is the nature of free cash flow, we see a consistent pattern that also goes up and to the right. Particularly, the free cash flow margin has been improving from single digit to over 30% as of now. The company also provided guidance for next quarter and for entire year 2025. While the numbers were strong, the market didn't like them too much and tanked the stock price. The main concerns were related to lower bookings than expected and management strategic pivoting from direct monetization strategies to a long-term value creation that puts users and their learning experience on top. We'll discuss this later in this video, but I think this was a clear inefficiency as market was blinded by short-term preference. Over time, this mistake will be corrected and investors buying at current prices will greatly benefit. In any case, bookings guidance for next quarter was about $332 million in the midpoint, which is crazy considering they just scored $282 million, an all-time high. So the company is guiding for a record after record. And the market is selling the company? I don't see the point, so I'm a buyer. The company also guided for over $1 billion revenue for a year. This will be the very first year ever in scoring billionaire revenue. A very big achievement. Duolingo is demonstrating strong economies of scale through its over 135 million monthly active users, which are up 20% year on year. Last quarter, we observed a drop in the total number of monthly active users. The number of MAUs in Q1 was significantly elevated due to a viral social media marketing phenomenon called the Duo campaign, which drove a massive temporary surge in new users. But these new users were expected to churn in the following quarter, making the sequential comparison look like a decline. According to management, this decline was not a concern, as the long-term trends and engagement metrics remained very healthy. This was confirmed in Q3, in which MAU's growth resumed to an all-time record high. Many call this Dead Duo campaign one of the most bizarre marketing events in recent years. Duo, the owl, is Duolingo's beloved mascot, and seeing it laying dead in your phone was not fun at all. From an investment perspective, this was just one of the many experiments management periodically runs, which should not have any meaningful impact in the long-term prospects of the company. Daily active users was over 50 million in the quarter, another all-time record high for the company, and up 36% year on year. In contrast to what we observed with MAUs, the DAUs have kept increasing quarter after quarter without stop, and this time with a whopping 2.8 million new DAUs. In addition, we see how daily active users are growing faster than monthly active users, which indicates the platform is becoming more engaging and sticky. If we compare both DAUs and MAUs, we see a very clear trend. Users tend to use the platform more and more often, from around 25% in 2021 to over 37% as of 2025. This is yet one more proof that the platform is sticky and makes users be willing to log in more often, further increasing its monetization capabilities. This is one of the company's moats. Duolingo offers both premium and freemium user access. Premium users are a much more direct and recurrent form of monetization, which makes them more interesting for the company. The number of paid users keeps increasing over time, this quarter hitting yet another all-time record number of 11.5 million. To put this number in perspective, the DAUs are over 50 million, and the MAUs are over 135 million, so the total paid users are just at 23% and an 8.5% of the DAU and the MAU respectively. This means there is a lot of room to grow the number of paid subscribers, which, by the way, this last quarter grew 34% year on year. In particular, we usually refer as the subscriber conversion rate to the percentage of MAUs that are paid subscribers. As we mentioned before, this number is just 8.5% in this last quarter, but if we track down over the previous years, we see that this percentage has been increasing consistently up from 3%. This is a trend that we, as investors, like to see, as it is a clear sign of users appreciating the platform and paying for it. There have been many concerns on whether the company could get disrupted with the rise of GenAI engines like ChatGPT or Gemini. In general, I find having doubts on this front more of a lack of understanding on the capabilities of both Duolingo's platform and of the LLMs. In reality, GenAI is not a disruptor, but in fact, it is a catalyst for Duolingo. The company is leveraging AI to scale content and deepen user engagement, with LLMs viewed as a key strategic advantage by the management. Duolingo is now an AI-native company. AI accelerates Duolingo's value creation process because it enables them to do far more in less time and at a much lower cost. Much content is now AI-based, either directly AI-generated or AI-driven, like interactive conversations with AI. This has boomed the number of offerings Duolingo has for users in this last year, with over 150 new courses launched, a process that could require years of development per course not long ago. AI also enables Duolingo to run hundreds of experiments every quarter, powered by the world's largest language learning dataset, to evaluate new forms of engaging with users, what they like and what they don't. This iterative process reinforces the content generation flywheel to a whole new level. The more users use the platform, the more the AI running in the backend will learn about them and about what teaching practices are more efficient. We should expect a progressive improvement of this product, part of it being autonomous. This has positioned Duolingo as the most used educational app globally by a large margin. So, in conclusion, Duolingo is actually leveraging AI to strengthen its position and expand its total market. The company is the AI layer 2 play in the education industry. ChatGPT and other LLMs are a tailwind and not a headwind. In the end, these models are new and powerful tools available to Duolingo to work on, and not a replacement of their platform. There is way too much value generated by Duolingo if we compare it with raw usage of LLMs by the users. Sure, you can learn a few words by using ChatGPT, but you won't learn a language with it. CEO Luis Bonan summarizes this same mental framework quite elegantly during the Q3 2025 earnings call.
In terms of the competitive landscape, I think people say things like the two things that people say about the competitive landscape with AI are, number one, why would anybody want to learn a language with Duolingo when you can just learn it with ChatGPT? We're not particularly worried about that. We've said it before. The main thing that we do really well, not only do we teach well, but the main thing that we do really well is keep people engaged. And in order to learn a language, you need to be engaged for years. Really, it takes years to learn a language, coming every day. And we need to keep you engaged, actually doing it. And not only that, we also need to have curriculum for years for you to do that. So, with ChatGPT, you can go there and you can ask it to teach you a few words here and there. But, it's not like you can have really curriculum for years that teach that. So we're not particularly worried about that aspect. And then the other thing that people, have said that they're worried about is, oh, well, nobody's going to want to learn a language because, we're going to have simultaneous language translation. And okay. Also not worried about that. I believe in 100% of the Google I/O conferences over the last 10 years, they have showcased simultaneous language translation. They do it every single year, and it's good. It works. But this has been happening for the last 10 years, and we have not seen the desire to learn a language go down at all. In fact, it has come up. And I think the biggest reason for that is because if you look at our users, they fall into two big categories. One big bucket is people who are learning a language as a hobby. It kind of doesn't matter whether a computer can do that. It's not the same with chess, by the way. Computers are way better than humans at chess, but still, we have millions of people wanting to learn chess. So it doesn't matter if it's a hobby. The other big group of people that are learning a language with us are people who are learning English, and they actually want to learn English. Like that is, for them, being able to have like a phone that they have to hold out, it just kind of, that's not what they want to do. So we're not particularly worried about that. It just so happens that people like to tweet about that, but we're not worried about it.
In addition, management has shifted focus from straight monetization to long-term value creation in the form of new verticals, like chess, and on improvements to Duolingo's teaching capabilities. In fact, they are stating that they want Duolingo to be the best learning platform, period. Every course is a new vertical that will remain evergreen with little maintenance. In the end, there is nothing new in the English language or in chess, and whenever there is an update needed, it can be done efficiently by leveraging AI. So Duolingo is now putting their efforts in enhancing the learning experience, which will ultimately be the main component that makes the platform sticky. The CEO stated this strategy clearly in the last earnings call.
Now, in terms of the metrics that we're going to be looking for, certainly user growth is an important metric that we're really keyed in on right now. Probably the most important metric in the company. So we're going to be looking at that a lot. Now, the thing about improvements in teaching, and this is what I was saying before, they don't translate to user growth immediately, because if you improve a course and it's much better, over time maybe people are starting feeling that they're learning a little better, so there's more retention, or maybe there's more word of mouth because the people are saying like, it really worked for me, let me tell you about it. So it does translate. We know that improvements in teaching do translate to user growth, but it's not immediate. And this is kind of what we mean by long term. What we're going to be looking at there are things like just improvements in learning outcomes. We can measure how well people are learning. And the good news is that really almost every year since we started measuring that, every year Duolingo is actually teaching better than the year before. We're probably going to see improvements in how well we teach move faster than in the past, because we're taking it we're spending more effort on it. So we're probably going to be seeing that. And our hypothesis, but it is a hypothesis that I very much believe in, is that that will translate to user growth. It's just not going to be linear or quick.
Still, in the monetization front, there are some levers management could pull to fastly increase it. For example, people doing 2 or more courses pay the same subscription than users doing 1 course. By having multiple paid subscription tiers associated to different number of courses users can enroll, this seems like a quick and easy form of increasing revenue. Another possible new form of monetization could be to take advantage of their network effects. For example, make users learn together, like PvP chess. A user can invite their friends to play together. This is a very strong network effect. Or, for example, for language learning via speaking with friends in a different language or with foreign students. This could be a game changer because it is the first real social locking feature that made Facebook or Instagram unstoppable. The overall moat of the company will widen up. Management is aware of all these possibilities and still has decided to pursue a long-term growth approach, which I agree is the best overall, even if the market is penalizing the stock price in the short term. Duolingo is pivoting from aggressive user monetization to user growth. Management has reiterated this over the course of several earnings calls. They have the levers to sharply increase the monetization per user, but instead, they prefer to offer more value to customers, make the platform stickier, and grow their user base. Short-term focused investors don't get it. The stock gets cheap for a few quarters, then explodes an order of magnitude higher once monetization kicks back in. With respect to valuation, I like to value Duolingo in terms of price-to-sales ratio, given how recurrent is the revenue. As of today, Duolingo is at its all-time low valuation since its IPO back in 2021. In contrast, revenue per share keeps increasing over and over. So, all metrics go up and to the right to all-time record highs, while valuation goes down to an all-time low. Okay, this is very interesting. Okay, so what's my game plan with Duolingo? Considering the investment thesis presented in this video, we see that Duolingo is a company with recurrent and predictable revenue on its main platform with little to no competitors. The platform presents a very sticky business model that keeps stacking evergreen verticals that require little maintenance. Contrary to what the market thinks, GenAI is clearly a tailwind for a company that opens up plenty of additional forms of monetization, product improvement, and interactiveness, further enhancing the value provided to the users. And the cherry on top is that it is currently run by its founder and CEO, Louis von Ahn, who is heavily vested in the success of the company and focused on the long term. Given all these reasons, we have currently rated Duolingo as a quality BBB company. That's the top investment level rating we give. We currently have about 1.2% of the fund in Duolingo, remain bullish in the company, and are actively expanding the position at current prices. In our humble opinion, buying Duolingo at this price is a no-brainer that will pay off in the future. But how about you? Do you think Duolingo is a good company to add to your portfolio? Leave your comment below and we can discuss about it. Alright, that's all for today. Just a quick reminder that this content is not financial advice. Please do let me know in the comment section below if you have Duolingo stock or you have plans to start in a position, and don't forget to like and subscribe. It helps us a lot in providing better and better content. Thank you very much for watching. See you all in the next episode.